Elara Capital has now initiated coverage on auto major Hyundai Motor with a target price of 23.90. Markets in fact, expect the share to bottom in FY27 with two new model launches planned for FY27 as well. And we've got Snehi, or rather Shesha, from the research desk with details from this particular note.
Well, yes, Hyundai India in focus, and this is on the back of Elara's initiating coverage report. Buy rating target price of 2390, implying nearly 18 to 20% upside from the current market price. Now, first up, let's talk about the market share, where Elara says that market share declined by nearly 210 basis points in FY26, but they expect market share loss to bottom out in FY27 and gradually improve going forward. Two new model launches are lined up in FY27 and 26 launches, including 7 new nameplates by FY30. So this is the lineup and the launch timeline that the management has shared. Now, other than that, exports, they've made some commentary on that as well, where they say that exports are targeted to grow by about 8 to 10% in FY27, despite Middle East headwinds, and exports are targeted at 30% of production by FY30 versus 21% currently. So, as a percentage of their total revenue pie, the share of exports is likely to rise going forward. Meanwhile, they've also spoken about demand, where demand from government employees is likely to inch higher on account of 8th pay commission, which is seen as an incremental tailwind for demand. And PV industry growth is estimated at about 7% in FY27. And Hyundai's domestic volume growth is expected to come in at 6.5% in FY27. So demand drivers are intact, market share is likely to gain going forward, and most importantly, as far as the triggers are concerned, they continue to remain intact, and that is the reason the stock in focus initiating coverage from Elara Capital.
Okay, that's Elara.